All right, everybody, how we doing out there? Doc Severson with you here, Ready, Set, Crypto. Today is Wednesday, what is this, the 5th or 6th of February? What day is this? It is the 5th of February. Welcome to our Ready, Set live session. I've got a guest with me here today. My guest name is Schuyler Edwards. He's of Crypto Hippo Trading.
Yep.
Hello, everybody.
Hello. Thanks for having me on, Doc. I appreciate it.
All right. So let's see where everybody is coming in from today. We've got folks all over the place. I am coming in from Greenville, South Carolina. We're about to get 3.5 inches of rain tomorrow. A lot of folks out in the Midwest Plains are getting blasted by snow right now. So we just get the rain down here, which is cool. That's why I moved down here. So
I've got the snow going on right now for me, 3 inches outside.
you got 3 inches outside. So Schuyler, where are you from? Where are you calling in from today?
Yeah, Idaho, actually. So if anybody in the chat room is from Idaho, give me a shout out for those Idahoians out there.
Now, are those potato plants behind you?
Those are outside. So we're outside. Coming into season, you know, they grow winter and all year.
All right. So we have Anthony coming in from Long Island. We got Tristan coming in from Toronto, Canada. I was just there last year. Phenomenal place. Let's see where everybody else is coming in from. Brooklyn. How we doing out there? How's it going, Brooklyn? Andy, thanks for coming in today. We've got Schuyler's going to give us some interesting information today. So stick around for a few minutes here because we're going to have Schuyler talking about Elliott Wave as well as some other things. Let's see. We got BitZed coming in from London. We've got music exclusive from Pennsylvania. Woohoo!
Dang.
We got Philly. We got Melbourne. We got Seattle, Amsterdam. Just for Ones from Ireland. And we have Patrick from Germany, Christian from Norway. Yay, Norsk. Let's see, we've got Austria. So we have a global group on today. I want to thank everybody for hanging out today. Like I said, we've got a special guest. It's not Mav didn't change overnight or anything like that. This is Schuyler Edwards. He is from Crypto Hippo Trading. And we've got Schuyler on to give us some information today. A new presentation, so a little bit different information. It's going to be on Elliott Wave. So I want you guys to stick around and we'll get that started here in just a second. Okay, Manchester, Latvia, South Texas. Okay, I think we have a quorum. So Schuyler, the room is yours and I'll let you just grab it away and I'll be in the background here helping if necessary.
Perfect. Okay. I'm going to go ahead and share my screen here. Can you guys see my screen all right?
Yeah, I can see it fine. So if I can see it, they should, that's what's hitting the stream. So
Okay,
you're good.
beautiful.
You're good to go, man.
Love it. Wow. We really do have a group from across the entire world here, you guys. Thanks for tuning in. That's the power of the internet. Absolutely love it. I mean, I don't think one person said the exact same place that they were from. So literally from all over the world, you guys. Pretty cool stuff. All right. So today I'm going to be going through, I want to give you a little bit of background about who I am a little bit, tell you guys my story, but I really want to talk about some common mistakes that are being made. And I want to dive into a method that really changed it up for me. Okay. And so, and what type of a result that's done for me as well. And what it's done for some other people that I've taught it to. And I hope that it can do for you as well. So I'm going to dive into kind of my background and my story just a little bit here. Before we dive into that, I kind of want to ask you guys some questions and feel free to just answer in the chat here. But I'm curious how many years or maybe even months you guys have been trading for, or even just learning. Maybe you guys actually haven't pulled the trigger and started making trades. Maybe you're just learning, kind of get a grasp of how many out there, how long you guys been trading for. So kind of let me know in the chat here. And then I also am really curious too, if you can agree with me that there's just a flurry of information out there. I know that as a lot of us come into this space and we're trying to learn about crypto, we're trying to learn about trading, you know, YouTube tends to be the first place that we go to, or even just online on the internet, and we're just searching it in, Googling it. or throwing it up on YouTube videos. And there's just a cluster of information that it's hard to filter through all of that and find the people that are reputable. So let me know if you've kind of ran into that problem um, on your journey thus far into trading. And then I'm curious too, because of all of that information out there, how many people, give me a number, kind of think in your head, how many people do you actually follow when it comes to people that are making market predictions? You know, all those signal groups that are out there, and just market predictions in general. So there's a lot of people out there, including myself, that do those types of videos. And I want to know, how many of those people are you following? Do you watch 3, 4, 5 videos a day, or do you just have one particular person that you're watching? Okay, so let me know some of those as we're diving into this, you guys, and keep those questions in mind too as I kind of go through my story, because these are a lot of the problems that honestly I faced as I kind of started off my journey into trading and with crypto as well. So I just want to give a shout out to Mav and Doc, because honestly, it's a blessing to have people like them in the crypto space, and even just in the trading space in general, giving the type of quality content that they're putting out there and the organization of it too. That is one of the most powerful things. And when I really got a handle on the organization of it and finding where that information is organized at, that was a big game changer for me, rather than the cluster of information that's out there when it comes to just trying to find all the different YouTube channels and all the different forums and blogs and so forth. So, as we dive into this, you guys, I know you guys will probably have some questions here and there. If I can just ask you to save them towards the end, I'll be more than happy to stick around and answer questions with you guys, give any clarity to anything that might have been confusing and so forth. Okay. So, diving in, I want to give a little bit background to my story. It's probably a lot more relatable to you guys than you would probably think, because it's a pretty average overall. So, I grew up in the restaurant industry actually. So for me, you guys, I did dishwashing for 3 years, 4 years, all the way from like 16 to 19. Going into college, even I was just washing dishes. I grew up with a family and parents where it was just 9 to 5 was the thing. We didn't do any sort of real estate investing. We didn't do, have any financial background in the markets. Heck, I didn't even know what trading was, or even about investments or stocks growing up. I really came across it more in 2012 when I was 21, and I had pulled out of college. And so for me, it was really driven into me. And even when I went on my journey of trying to become independent and become a business owner and a full time trader, that my mom just kept drilling it in me to go get a job and work the 9 to 5. Work your way up. It's what she did, and she did all right for herself. Um, but that was just the mindset in my family, you guys. So it really, I didn't have that entrepreneurial, influence by any means, and maybe a lot of you guys don't either. So I think it's really important to have those type of online mentors or even coaches as well, to help us move along in that process a lot quicker. And that's definitely something that's accelerated my journey. So with that being said, with that having that type of a background and so forth, my journey has really been around self education. So I did spend 2 years in college. I went in for business. I've always had a love and a passion for business and for math and finance. And so when it came to like math, I was 2 years advanced all the way through up into college kind of thing. So I had the mindset for it. Like I could wrap my head around numbers pretty easily. I got a pretty technical personality, and so diving into the self education thing was something that I could really submerge myself into. And in 2012, that's really when I dove into that and started learning about the financial markets. And just like anybody, right? There's just an overwhelming load of information. When you get into it, you have no idea where to start. The language is like one of like a whole new language all on its own. And so it's overwhelming. Honestly, I see why people don't get into it. And the vocabulary in itself can be overwhelming to try and memorize all those. I remember writing down note cards even and flashcards just to remember that type of information. So that's really where my journey took off from. But just like most people, I really didn't do anything with it. It was, obviously I was working, and so it was just something I did on the side, going through college there. And then when I pulled out of college, I went and worked with my dad, and from there, then I got into a corporate job with the restaurant industry. And let me tell you, that was work, 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 work. And amount of time that I actually had available for self education was really in the evenings. So I didn't have a TV. I didn't watch television. I didn't have Hulu or Netflix or anything like that. No, I went to work. I worked 10, 12-hour shifts. I would come back, sometimes longer, and I would come back and I would just read my books and study, and hoping to eventually have a financial freedom in the long haul. I had a 401k with Red Lobster. You can see a picture of me down here with it. And I thought I was, doing pretty good. And my mom was super happy, put away. And I was looking at the gains on that, and it's like 9%, 7%, like for the whole year kind of thing. And that was good. That was in a bull market kind of thing. So it really just, it wasn't what I wanted, you guys. And so I continued this self education in 2017. Is when the crypto markets, I got introduced to it right in the early beginnings. I bought Ethereum when it was $33 and $16. I got in, I think Bitcoin at the time was around $1,000, maybe a little bit more, somewhere around in there. ADA was like 11 cents. And it just, obviously, I ran that whole run up with 2017. And I'd started only with $800. I didn't know what this space was. I didn't know what it could do. I didn't want to throw a whole lot of money into it. And I'd worked hard to, when you spend years trying to get $4,000 into a savings account and so forth, right? You cherish that money for a little bit. So I got in 2017, and I ended up taking that $800. And by then, I was obviously pretty well educated in the financial markets, and I'd been trading for a little bit, but not heavily. And when I got in and rode that wave up, that's really where I started cashing out and trading full time. And I said, you know what, I'm taking this full. I quit my job, and I went full time with crypto in early 2018 into 2017, and I just dove in. And at that point, boy, I thought I was working when I was in in a restaurant industry. I was falling asleep with the laptop on my chest in bed. I was sleeping in a different room away from the girlfriend. I mean, I was obsessed with it, you guys, and I put my heart and soul into doing it. I was full time with it. Like, I got to make this work. It was do or die, and I didn't go running into it with a whole lot either. So the reality was that I was able to jump into it full time with just $10,000, and so I think that's a number that a lot of people, they think it takes a lot more. And although I probably wouldn't recommend doing that again at 10,000 because it was a little bit stressful at first, I was able to grow that into a $30,000 portfolio and then on to six figures from there. And now it feels a lot more comfortable. I've got a lot less stress. And so that's a little bit about my background and my story, you guys. And I want to show you really where the lessons that I've learned in the game changer as to where things really shifted for me. And that's the bread and the butter that I'm going to bring to you today. So with that being said, these are the things that did not work for me. Okay. And I spent way too much time struggling with these things. So if you can take a screenshot, write these down, whatever it is, if I could go back, this would have saved me a lot of time and money. And the number one thing on that was the flurry of free information. It's great that we've got free products out there and that we've got free information and so forth. But the reality of it is that it's disorganized and it's not high quality, information. It's very basic information. And because of that, once I realized that, I started actually investing in on courses. Okay. I'm going to throw some money at this. I'm going to really learn and so forth. And let me tell you how much money I wasted, thousands of dollars, you guys, on courses that just had the basic repetitive information. And when I think all of us start out spinning our wheels looking for that holy grail of an indicator of a trading strategy. And so we end up like diving into a course on, a particular indicator or particular trading style. And we end up picking up another one. And that's what I was doing, is that I was going from one course to the next course to the next course, and it was all very, very similar information. Nothing was getting me up and above. And so because of that, um, I ended up wasting a lot of money, you guys. So I'm going to tell you what I ended up doing to fix that here as we go through this presentation a little bit here. So the next thing, you guys, was finding the right teachers. Okay. There's a lot of flurry of information out there, lots of YouTubers, right? We were talking about the numbers that we have that people follow. For me in particular, I was probably following at least 9, 10, 12 different people. I would go and watch video after video after video after video. And not everybody would agree on where the market's going or have different targets. And a lot of it was just a waste of time. And the reality was I wasn't coming up with it myself. And so deep down, I didn't trust it. Okay? I didn't trust in my own, execution of it, of taking a trade and so forth. And so, and because of that, I had little trust in others as well. So, and you put all that together and you've basically got no organization, you've got no structure. And that just results in you just spinning your wheels. And that's what I was doing. Okay. The other thing too that wasn't working for me was that I had no idea that self awareness took such a big role in trading. If you have not taken a personality test, a strength test to understand yourself a little bit better, whether you're patient, greedy, fearful, what type of emotions you're going through when you're diving into actually taking a trade, then you're doing yourself a big disservice. You've got to be very self-aware, and that's something that I found out way too late in the game, in regards to trading. So because of all this, I really had no application. I had no execution, and what I mean by that is that a lot of those courses they go over the definition information is what I like to call it. Like it's where it's just the basic definition of what you're doing. Okay, and so because of that, no application, no execution, and I came to realize that really the solution, you guys, was just sitting right in front of my face, and it was really simple. Once I could get clear and focused, and I knew what I needed to focus on, then things really started to change over for me. Okay, so this is when it starts to. This is where I had to get on the right path. Okay, and I narrowed it down basically to just four things or five things here, on creating some clarity and focus for us. So is that one? I needed to understand market and wave structure. I don't care what indicator you have out there. If you don't understand market and wave structure, then you're leaving so much more understanding on the table rather than just listening to some lagging indicator. So, and I put both of them on there, market and wave structure, because really market is made up of wave structures. Okay. And as Doc said, in regards to talking to you guys about Elliott Wave, I'm going to bring up some things in regards to it because it is the master of understanding wave structure. But I really want to give you a clearer focus than just that. Okay. So, the second one was getting focused. All right. We are trying to learn way too many things all at the same time. We're trying to learn everything about every indicator out there. And I'll tell you right now, I've spent so much time doing that and I still haven't learned them all. Okay. So you could probably spend a lifetime doing it. And by the time you feel like you've conquered it all, they've probably made two changes to the settings on it and called it a whole brand new name. And here's a whole new indicator out there for you. Okay. So the reality was to get focused, find two to three things max, and just get good at them. I just got back from an event in Nashville, Tennessee, and Tony Robbins was there speaking. And the biggest takeaway from it was really focus. It was about having just one thing that you put your attention to, because the reality is when you give something 5%, you're not going to be very good at it. And when you're trying to learn five, four, or 10 different indicators, or you're trying to watch 10 different people, or you're trying to take five different courses, you're spreading yourself too thin to be good at any of them. And that's what results in us spinning our wheels. Okay. The third thing here was finding a trading style. This is where it comes into being self-aware and knowing your personality. Is that really you've got to, if you're an impatient person, you probably shouldn't be swing trading. Okay. It probably isn't the best trading style for you, and vice versa. If you are a greedy person or a fearful person, and those aren't bad words, they're just truthful words. Okay. When you're in the market, these are the emotions that are going to rise. Are you the guy that's always trying to get the last little penny out of the stock? Okay. That's greed. All right. Are you the one that's leaving your position too early? That's fear. Okay. But being self aware of these things, writing these down, recording them, that it's going to allow you to pick the right trading style that goes with your personality, or allow you to adapt your personality to the trading style. Okay. But you've got to be able to notice the difference between the two. The fourth thing here was to stick to a trading strategy. Okay. There's a difference between a trading style and a trading strategy. A strategy is something, if I ask you guys right now, and let me know in the chat too, but do you have a set number of rules or guidelines that you're looking for when you're scanning the market? Do you go into the market with intention? Are you looking for an indicator to say a particular thing? Are you looking for a certain candle? Are you looking for the criteria to meet your strategy? Okay. Because you should be going into the market with intention. And that's what I mean by sticking to a trading strategy. Okay. And then the last one here was to manage your risk. And I can't stress that enough, is that the reality is that we can have trades that go south, and they always are. And we could have a trading strategy that is below 50%. But if we manage our risk, we can come out profitable in the end with it. Okay. And one thing that goes into managing risk too, and this is where it comes into play with the those of you that are out there watching, 10 different YouTubers, you guys get my gist. um, that's also impacting how you're managing your risk because um, you're not following your own strategy and your rules. You're letting other people influence that. Okay, so that's kind of where I wanted to the things that I was doing wrong and narrowing it down to what I just needed to focus on in order to bring clarity and actually become successful with this. And these were the things that did it for me. Okay, so I want to zoom out here and I want to go into the method. Okay, this is the bread and the butter. This is the good stuff right here. Okay, you guys got a little bit of background about me. You know what I did wrong. Maybe you're doing some of those same wrong things, and then you know what I changed up and what I started to focus on in order to actually become successful and become independent with this. And so, with that, we're diving into the method. And this was the method. This was the holy grail for me that really put it all together. And it wasn't an indicator, but it was Elliott wave. It was wave structure and understanding market structure. Okay, and so the best tool that for me was Elliott Wave to give me this, but really I'm not even going to teach Elliott Wave because we wouldn't have enough time for that in this in this video. But I am going to give you the wave structure and show you some really key factors as to how you can one prevent yourself from being stopped out with your stop losses. If that's one of you, if you are one of those guys that always gets stopped out with your stop loss and then price moves in the right direction right after it triggers your stop loss, I'm going to show you just one trick, literally just one trick on how that you can drastically prevent that. And then I'm also going to show you the wave structure in the market and how that actually influences how you can escape trades in advance and how you can project where the market's actually going to be going. Okay. So we got to understand wave structure. This is the flow of the market. And the best thing about it is that it's got rules and guidelines. Okay. And because it has rules and guidelines, that means that the rules can help us eliminate potential outcomes and possibilities, and the guidelines can help us increase our probability. And when you pair this up with tools and create measurements, you get predictability, projections, and probability. Okay. And what I mean by that is that it's a process of elimination. So we can finally, for most traders, they don't have any clue when Bitcoin is going to surpass $20,000. Let's just say, where's the target at? Where are we going? All right. And understanding wave structure and understanding the tools that I'm going to at least expose you to in this video, that's how we're going to be able to figure out those targets. Okay. So I focused on this like crazy. I knew that for me, it really clicked. I saw the opportunity in it, and so I dove in and just did a bunch of courses on it and got coaches for it and so forth. And a lot of it was very repetitive information. And what I found was that people just failed to connect the dots and actually show application. This goes right back to the YouTube videos that I was talking about with free information and how it's all definition based, gives you really basic information, but it's like, how do I actually apply this in real time? Like, it's great that you're going back and showing all these examples of it and how it worked, but when price is actually live and happening right then and there, how do I execute on this? How do I actually apply it to the charts and become profitable with it? Okay, and so that's something that really clicked for me, that was just driving me crazy in the markets, that I wanted to come in and I wanted to disrupt and change that and provide something different that could actually give application and execution to real time analysis. So, with that being said, I dove in to really measuring and recording my own performance and results. And because of that, I got a lot of discoveries. I got really, really comfortable and really intimate with Bitcoin and with the crypto markets and being able to read them. And there were a lot of new discoveries that came to light because of that. So this is where I was able to connect the dots. This is where I was able to figure out the application. And because of this, I was able to create a systematic approach to it. Okay. And so I want to give a little bit of an example. I've got one and two here of what exactly I'm talking about when we talk about wave structure. Okay. So example one here, you guys, is talking about the flow of it. If you guys can see my orange line here, okay, and my white dots. Okay. These are my peaks and my valleys. This is 3 waves versus 5 waves. And it's just the flow of the market. And by building a relationship with this and understanding the rules and the guidelines that impact where these waves are allowed to move or even likely to move, makes a really big difference on where price can go. Okay. And this primes me for where I can get my entries and my exits at. So it allows me to really honestly pick the tops and pick the bottoms better than anything else that I've been able to do. Okay. So come out here. I want to show you the second example here as well, you guys. And then we're going to kind of zoom out of this. I'm going to take you guys into charts. We're going to get a little hands-on as we dive into this just a little bit here. So rules and guidelines. Okay. This is where if we have rules and we have guidelines, we have structure to follow then. Okay. And if you pair these with the proper tools, you're going to get the proper measurements. And this is just a little clip just to show you guys what I'm talking about in regards to measurements. Okay. A lot of people say, you know, 1-to-1 is one way to look at it. And you can see the equality in these wave structures here. Okay. Uh, they flow. And this is what I want to teach you. And I want to dive in to showing you about the stop losses. And I want to dive in and show you about the actual wave structure real quick on how that actually prevents you from getting stuck in a bad position or getting out of a position early the moment that you can recognize that it's going to go south. Okay. So let's go ahead and let's dive out of this beautiful presentation that I put together and go like that. All right. And let's dive right into the charts here. So, everybody, let me know if you can see my screen here.
It's looking good.
All right. All right. Thank you, Doc. Okay. So, what I want to talk about here is first and foremost, the wave structure. Before we dive into any tools here, I want to try and keep it basic and really keep it uh, simplistic right at first. Okay, I don't want to go right over your head with anything. So, and for those of you that understand Elliot, awesome. I guarantee that I can take it to a brand new level for you guys and a lot deeper when it comes to application and execution and actually putting strategies to it. So, don't zone out on me. I guarantee that that you can learn a few things as well. So, with that being said, when we dive into this structure right here, what we're looking at is we're looking at 5 waves versus 3 waves. And when for somebody that's brand new to looking at the market, this can look like gibberish, right? You don't see 3 waves, you don't see 5 waves. And so I've put the lines on there just to kind of give you a little bit of an idea of what I'm talking about here. Okay. And what I want us to be able to recognize here is the difference between 3 waves and 5 waves. And really what it comes down to is that when we see a market that flows with 3 waves, it means that it's counter trend to something. Okay. So notice that we get 3 waves here. And inside of here, we've got just the 3 waves there as well. Okay. These typically can be separated out by sideways movement. So, a simple way to try and make this is look for, if we kind of just zoom out here, is look for sideways movement where we just kind of get corrections like this. Yeah, you could even call that one there, right? And by doing this, so a lot of people ask, where do we actually start looking at a market from? And it's interesting because I also do drawing, and for me, when I first learned drawing, they always say that you have to start with the eyes, or you have to do the outside of the face first when you're drawing something in particular, like a face. And so, when it comes to the markets, there's 2 ways that I like to draw. I either start at the outsides, so towards a low or towards a high, and I work my way in, or I go from the middle. And when I talk about the middle, I'm talking about these sideways movements, these sideways corrections, basically. Okay. And then I start to piece things together. And that's where you can understand the flow between 5 waves versus 3 waves. So if we look at this move right here, you can see here that obviously these little moves here are corrections and are 3 waves in nature. They just kind of flow in 3 waves and they end. And whereas these moves here are to the trend, they're 5 waves. And so you can see that flow in that structure. Okay. And this is what you have to master. This is what, if you can comprehend this and get really comfortable and familiar with how the market flows, you can pair it up with indicators a lot stronger. So I'm not saying I love my indicators and I've got my few that I definitely by all means use. And some of them I couldn't do this without them. But I also couldn't just use the indicator. So they're hand in hand, and it will strengthen any strategy out there, in my opinion, by understanding Elliott wave and how the market structure actually flows. Okay, so 3 waves is corrective. It goes against the trend. 5 goes with the trend. Okay. So it tells you where the price is actually moving towards in the larger scheme of things. And this breaks down into a fractal. Okay. That's probably the hardest thing for people to actually grasp is the fractal aspect of it and how you can drop down into time frames. And because of that, it's also one of the most important. If you can pair up the fractals and the time frames, in cohesion with each other as you move through the charts, you can see the bigger picture as well as the smaller picture, which is part of the systematic approach that I put to the markets in order to actually understand this. Okay. So, what I want to talk about with understanding the difference between the 3 and the 5 waves here is also the measurements that come into play with it. So you're going to see it's really funny actually to watch a lot of traders. They use Elliott wave all the time in their trading. They just don't actually know it. They don't actually count it. And if they understood it better, you would actually allow them to see when to exit their positions, if say for pattern trading and so forth, a lot differently. So it's not something I want to get into because I can go on a rant and just talk about this for hours, you guys. It's what I love, it's what I do. um, but I just can't express how powerful it is when you pair it up with anything. I don't care if you're a pattern trader or indicator trader. If you understand the ins and outs of Elliott wave and understanding market structure, holy cow, guys, it's a game changer. And this was the game changer for me. Okay. So for me, I want to show real quick in just this example here on how the three waves allows you to determine that something is going to continue or not. And in regards to this here, when we look at this structure, and I'm going to clear up the screens here and make it nice and clean cut. I'm actually going to blow that up just like that. That looks really nice right there. Okay, so the three waves here when this bounced. So anytime we get a bounce, and can be say we entered in right here, and I've got a strategy of why we would have entered in right there. But so we entered in right here, and price moves up, and we get this three wave move. Okay, and right there, we're looking for continuation. We're looking for this to turn into five waves. Okay. Because remember, five waves is going with the trend. So if this move right here is going to continue, we need to see five waves right here again. Okay. And so when we get three and then it down turns back in like this and comes back into this territory, it invalidates that. And it tells us, it says, hey, this is still corrective and we're going to see continuation. And so if you went long, that's your cue to get out of your position. And this is an actual rule, okay, with the market. So according to the wave structure we're using, Elliott, this is a rule. And when it gets broken, it gives us that validation that says, look, this move here is going to continue down. Look for the next spot for it to pivot. Okay. And so that right there in itself, just understanding that wave structure, can't tell you how many times this has saved me countless bad trades, or not even bad trades, but being able to get out of them early, right? Because this was a great entry. It bounced up like it was supposed to. We just didn't have follow through. And that's what Elliott Wave allows you to do. That's what understanding market structure or wave structure allows you to see that we didn't get follow through, and therefore we're going to see continuation to the downside. And then also pairing up with that, you can look at and make a very, very probable extension out to here as to where price is actually going to move, and finding confluence there, which just means a bunch of things paired up together to give a good support level as to why we can bounce there. Okay. So I'm going to go in just a little bit deep right here, real quick, and just show a couple of things as to how this works out. And then I'm going to go into the stop loss. And I know a lot of you guys are really wanting to see that stop loss trick, because I'll tell you right now, if you're getting stuck in those stop losses, and I'm talking about every single one of these right here, right? Where we break below previous low and we move back up. Okay. If that's you, if this is you, I've got something that will prevent it from moving forward. Okay. So, but real quick on this last note here, I want to show that when you pair it up with tools, you're going to get, and you understand the measurements revolved around the guidelines and the probability of what extensions we hit, you get really, really accurate tops and bottoms. Okay. And so, for example, with Elliott Wave, you're always going to be pairing up Elliott Wave with RSI and Fibonacci. It is by far, hands down, like they're best friends. Okay. They don't separate from each other. You shouldn't be doing one without the other. Okay. So with that being said, I just want to show how some of these measurements actually fan out, kind of given that snapshot that I showed a little bit earlier. So first and foremost is, given a trend extension here, I just want to show how when we pick from a low to a high and back down, so these are our pivots that we look at, okay, we're looking for extensions that are equal or a little bit greater than, okay? And what's great is that most people look at this that don't understand Elliott wave or don't understand Fibonacci. They look at this as they just say, look, I want a one-to-one extension. Okay. And so they grab an extension of this move here and they pair it up to there. And this is where their target would put them at, one to one. You can see that measurement there. Okay. Well, the wave structure inside of this, as it's extending up, is it's telling you a story. And it's telling you, hey, we're not done yet. Yeah, we made it to the one to one extension, but we're not done because we need one more wave cycle in there. Okay. And when you look at this by using the fractals of timeframes to piece it all together, it becomes very clear that, hey, we're not done yet. We've got some more upward movement. Okay. And that's where it brings us into extensions like 1.236, 1.382, and 1.618, very, very popular and common ones. You can see just as well how this played out in cohesion with, this wave running up just now as well. Can we dive in and learn so much more and test this out? You bet. Um, but it would get a little bit extensive on the time. So I want to just use the small examples and to show you guys just how powerful this really can be and how you use it with price. So the other move here is take a look at this one too. This one, the exact same thing, right? Came down to the 1-to-1. And when we look at this and we pair it up with even Fibonacci retracements from a low to a high like this, you can see how well we bounced off of the 0.618 golden pocket. All right, these tools to me were the game changer for me. And if this is intriguing you, if this is the stuff that you've been curious about, then I'm telling you, I've got a completely different way of looking at it and putting it all together that gives you a systematic approach, different than anything else that's out there right now. So, um, I want to go into, if you guys understand, let me know in the chat, you guys. Do you guys understand the three-wave structure versus the five-wave structure? Is that it's a brief description of it. I can't expect you guys to get to the advanced side of it just yet, but let me know if you guys understand the market structure and the wave flow and how the three waves is goes counter trend and the five waves is with the trend. And so if a move like this one goes up in three waves, kind of giving you this recap here, if we get a move that goes up in three waves and fails to see follow through for a fifth wave, then it tells us that this move here is still seeing continuation.
Charler, maybe
Okay.
if you were to call out like a good, legitimate five-wave structure here and let people understand this is wave one, wave two, wave three, wave four, wave five kind of thing. I,
Beautiful.
I
Yeah.
think that
So
would help crystallize it for 'em.
thank you, Doc. Yeah, more than happy to. So take a look at this structure right here. Okay. So this structure right here, you can see five peaks and valleys to it at least. And the peaks and valleys for me is the easiest way to really comprehend this at least. So um, use this little guy here. Okay. So when we take a look at peaks and valleys, we're looking for, that's pretty. Okay. So we're looking for a higher high and then a higher low. Okay. So we don't want to pick like some, point right here, right? We need to actually break the high of the previous one before we can count it as a peak or as a valley. And this will really help give a little bit visualization, a better visualization at least of where you can see five or three wave structures at. So you can see five wave structures there. But if you take a look, let's see, we'll use this one here as an example, right? You can see that we've only got, well, you're not supposed to count the first one. My bad, guys. Okay, so you can get only one, two, and a three here. So if we wanted this to be a five-wave structure, we should have seen another one like that and then another one come down like that. Okay, that would have been a five-wave structure. Okay, so let me know if this is making sense to you guys a little bit here. Let me go and I'll find one more here too as well. So look at this guy here. This is a three-wave one, right? Okay, so given the scale of it, we can see how that goes to three. And then when it came back down here into this territory, we can tell that that's corrective, right? So that makes sense that all of this is corrective. Let's find another five wave one here. We're kind of in the correction. So maybe if I actually come out to like a nice run up here. Okay. So here we go. We can look at this here as well. And starting from here, we can see one, two, we can see a three up here. Make it easier on your guys' eyes there. There we go. Oh, get me off lock. Okay. Oh, okay. So here's like another five wave structure, and you can see the three wave structures inside of those. One coming down, two, and then a three. Okay, inside of them, and these are going to be at smaller time frames and scales too. So again, here you can see the three waves coming back here. One, two, and three coming down that way. Okay. If we look at if we break down this structure right here, we can see five waves going up. We've got one here, two, three, four, five. And I'm not being super specific about it. We're just looking at the peaks and the valleys to keep it simple. Okay. So we're just looking for that higher high and the low. And we want it to be proportionate to the size of what we're looking in, right? I'm not going to pull this wave three down here. just because it broke that previous high right there. This isn't, that's, it's too small of a piece of the pie. Okay. So we want to look for where it's actually proportionate, where this correction back is fairly equal or lesser or greater than this one here. Okay. So it's got to look, fairly pretty on the eyes, so to speak. Okay. Same with this move here coming up here. You can see the flow, the 5 wave flow to it. If it was just 3 waves, it would have ended like this, and then we would have seen come back down. We wouldn't have gotten follow through. Doc, you think that makes a little bit more sense? What are you guys picking up on that, guys?
Yeah, what's cool about that is the if you zoom in on some of those, the pullbacks are actually fractals as well too. So that's a little three-wave pattern inside the pullbacks. That's
Yeah.
that's
Yep.
that's really interesting. I never considered that fact before.
So okay, so that definitely, like, once you can get an understanding of this, which it really is just practice, right? Anything takes a little bit of practice. You just got to get kind of familiar with actually seeing the flow of it. This move here too, we can talk about the current run up too, just real quick, just a couple minutes here. So we can see the 5 wave structure there on the flow too. And in between each one of these, we can see that 3 wave pullback here, right? One, two, three. Okay. This one, a little bit aggressive on it, but you'd see three if you dive into a smaller time frame there. Okay. And then over here, this one's very clear, right? Okay. So, whoops. And then the same thing goes here when we look at this structure here. Obviously, like, we can see inside of this one here, maybe 5 waves with one, two, maybe a three or a three up here. Maybe we got four. Maybe this is a fifth up here. Okay. So, maybe we've got, in correlation to size of this wave two here, this could very well just kind of be the top, and we could be starting a new cycle up here. Okay. Like another new 5 waves. Okay. So, by being able to just understand how the market is flowing here, it tells a story. And this is the biggest, most important part of it all, is that the way these waves break down tells you where the market wants to go moving forward. Okay. So, yeah, let me know, you guys, if that's making sense. Lexus, I'll take questions at the end. I don't want to get too off topic real quick. So save that question till the end. I'll be more than happy to answer it for you. Okay. Real quick, you guys, for the stop losses, let's go in and talk about that, because I show all my students this, and holy cow, it changed the game for them. Okay, so it's used with the Fibonacci retracement tool. Okay, so if you guys aren't familiar with the fib retracement, then you'll need to learn it. But it's where you just pull from low to high. Okay, you're always going from left to right, and what you're looking for here is, it's called a expanded pocket. And what this expanded pocket is where, for Elliott wave traders, it's where we get expanded B waves, and that is probably just gibberish to you guys, but that's okay. What it means is that it's where we look for price to reverse. It's where we look for entries. Okay, so let me give a couple of examples of it. Notice where, just very typical, when you come in as a beginner trader, you're always taught to put your stop loss right below the previous low. Okay. 90% of the time, that is bad to do. And if we look at it, if we just go back and look at history without even saying why, but if we just look back, here's the previous low. People put their stop losses under it. Price moves in the opposite direction. Okay. This one, you probably would have been a little bit safe, but it got close. Would have been scary. This one here. Okay. Again, we break underneath that low, and the price moves in the opposite direction. Okay. Let's take a look over at this one over here. There's a previous low here. Stop losses, moves in the opposite direction. Here's our previous low here. Stop losses, moves in the opposite direction. Okay. We can go over and over and over on this, and it happens in the opposite direction too. So, in other words, up above. It just happens in your different trend. So, in this trend here, notice that we break the previous high, boom, price moves in the opposite direction. Break previous high, boom, moves in the opposite direction. Okay. Why? Why is this happening, and how can we prevent it? Okay. So there's two concepts behind it. And one is known as a swing fail, and the other is just known as an expanded pocket. From an Elliott wave standpoint, with my type of trading, I call it just an expanded pocket. Okay. So what it is, when we take the fib retracement tool and we just move from swing to high, okay, it's the 1.236 to 1.382 pocket. Okay. So In Elliott books, you'll see anything past 105% actually qualifies as it. So technically a little bit past the one here. So you've got a box here, and we'll go back and we'll actually back test this live here, and it showed. But this is your box. Okay, that's your target box. And so when it comes to setting a stop loss, majority of the time you need to keep it outside of this zone. Okay, because this is like your worst case scenario of where price is actually going to move to. Okay, so with that being said, and anytime that we pick the fib retracement, we're doing it of the previous swing. Okay, so I want to show to actually like how to pull that. Like, in other words, we're not going to pull from like, I don't know. Let me find a good example of it here. So, well, here we go. We're not going to pull from like this move here and look all the way down here. Okay, the expanded pocket for it would have been on this in this scenario right here would have been all of this right there. Okay. And obviously, the moment we pass underneath the 1.382, it invalidates it. Okay. So, with that being the case, if you look back, the majority of the time, remember, it's not going to be 100%, nothing ever is in the markets, but it's the majority of the time. If you can find something that's over 50%, then you got yourself something pretty good to work with. Okay. And I would say this one is sitting right around the 70% accuracy for the most part. So, that's pretty high accuracy in regards to something that, that works. So, let's take this move right here. We're going to go all the way to the top with it. Okay. And again, 105% to 100 to 1.382, 1.236. For me personally, I like going with just the 1.236 to 1.382. And then if I miss it as like a buy-in opportunity, if I miss it and it moves in the right direction, I just jump back in. So, but that way I at least get the best possible entry ever in regards to this here. Okay. So let me clear this up again. Let's kind of backtrap again. Let's look at this one here. Okay. Moved past 105% right there. Okay. And so I've developed like a good strategy for this, which I called correction overlaying, in regards for this. And it actually works really well. But in regards to stop losses, you're wanting to put your stop loss outside of the 0.382 up here and outside of the 1.236 and 1.382 here. So instead of putting stop losses underneath previous lows, which I mean, we already went back and looked at this, 80% of the time you got liquidated and then price moved in the opposite direction. If you put your stop loss outside of the 1.382, 80% of the time you will save your stop loss from getting wicked out too early and price will still move in the right direction. And so for me, I don't even trade inside of this zone. Instead, where people are putting their stop losses at, I'm putting buys. And then I'm putting my stop loss right underneath the 1.382, sometimes the 1.618, but for the most part, 1.382. So when people are getting wicked out and their stop loss is getting triggered, I'm buying into it. And then my stop loss has a very good tight ratio to it right there. Okay. And you can use this on just about every move as you look at this here. Let's dive in a little bit more, kind of back test some more of this here. Okay. Let's take a look at this one here, see if that one would have worked. So 1.236, 1.382. Okay. On the downside there. Stop loss right there, entries right here. Um, we can take a look at let's take a look at this one in the opposite direction right here. Okay. Moving from here to here. So notice that I'm grabbing from the left to the right always, and it's always from the previous high down to the previous low. Okay. This one above the 105%. Okay. So it didn't quite come up to the 1.236, but you can see, imagine how many people put their stop losses right there, right at the end of that wick. All right. I know because I used to be that person. I used to do it all the time. And when I learned this and I started putting it outside of that, it saved me so many times. And you can just use it across the board. You can use it here and just get away from putting your stop loss right above the previous high for the most part. It's a bad spot to put it. And so people are at that point in time questioning themselves, well, why? Why is it like, where do I put it then?
Especially in illiquid markets, that's where you see those single candles that are just, one huge wick, because it's all one big stop run.
Yep. Yeah. 100%. I mean, this move right here too. I mean, they're all over the place. They're all over the place. That 1.23, it's beauty. It's a beautiful thing. So let me know if that makes sense to you guys on changing up where that stop loss can kind of go at in regards to using a fib retracement, pulling from left to right. You've got to have the 1.236 to 1.382 pocket on there. And then on the opposite side of it is negative 0.236 to negative 0.382. Okay. So let me know if you guys have any questions. Those were the two things I really wanted to dive into. I really want to stress the importance of wave structure and knowing it. Even if you just want to be a pattern trader and indicator trader, I tell you right now that this can complement every single trading style and strategy out there and strengthen it, honestly, by knowing the ins and outs of it. So, and then also with the stop loss, you guys, that one's a ton of value. I really hope that that helps you out and saves you from those quick stop losses and people getting triggered on just the previous highs and lows. Okay. I want to dive back in. I want to kind of close this up, you guys, and then I'll open up the doors to Doc, and then we can answer some questions together as well with some of the things that we went over. Okay, so let me squeeze out of this here. Coming back into the beautiful presentation. Okay, so quick little recap here, you guys. Wave structure, the things that did right for me, okay, was really just narrowing in, getting some focus. I'm gonna blow this up here. Narrowing in, getting some focus here, finding a strategy, finding a trading style, and being self aware. So you've got to match that up with your trading style, and you've got to figure out how to manage your risk. You've got to set some rules and guidelines for yourself. Okay. And in front of all that came understanding market and wave structure. Without the market and wave structure, my strategies wouldn't have been as strong. And that for me was really my heart and soul for finding my trading style as well. Okay. But stop dividing yourself so much. Stop watching 10, 12 different YouTubers. Stop trying to learn all the different indicators. Get intimate, get, familiar with a couple. Okay. Follow somebody consistently. That really impacts your risk too, because if you think about it, if you're following 10 different people, I'll just make this last little note here. If you're following 10 different people, you're not going to catch all of their good trades or all of their bad trades. And more than likely, because you're not familiar with how they trade or not familiar with their frequent updates or this or that, you're probably going to find and pick their bad trades the majority often than not, because you're not giving them 100% of your attention or even 50% of your attention. You're spanning it out across, 10 different people and giving them all 5%. And so you're increasing a higher risk when it comes to your trading and what decisions you're making. And it's also messing with your emotions. I can tell you that because that's my own personal experience, you guys.
You
So
become a jack of all trades and a master of none.
yeah, it's so true. So because of this and the method that I developed, you guys, this is what it brought me into. This is the results that I got. And really what it gave me was independence. It gave me freedom to be a full-time trader and been full-time now for 2 years. And it I have consistency, I have reliability, and I have a lot less stress because of that too. And that ultimately gave me freedom, and I love the lifestyle and I'm constantly trying to grow. Um, and, and that's great. It's great that I've got the life that I want and that I'm progressing forward and so forth. But it's not about me. It really comes down to you guys. And I get a lot more gratitude out of being able to serve. I think Mav and Doc do too. It's why they do what they do and provide you with the amazing content that they do as well. And so, because of that, I really want to bring into what it's done for other people, because I didn't want to start teaching this until I knew I could get other people results as well. And so, when we dive into this here, this is just some of the, you know, compliments or testimonials or whatever you want to get into on some of my students that I've personally taught. And they were my beta group. This was the very first group that I actually taught. I took on 5 of them and they got amazing, amazing results. Blockchain here, I think he might even be in the chat. Shout out to you, Ben. Um, this guy started with like a $1,500 account and he took it into 15,000 in 2 months. It was absolutely nuts.
I wonder if
And
Space Lord is with us today.
is he? Yeah, I got
No,
a few of them in here. They're my inner circle. They're my guys. And it's because I took them from the very beginning. Dragonfly was in here too. And this was this was my test group. I wanted to make sure that, hey, do I even know how to teach this? Because we talked about bad teachers and they're out there. There's plenty of them out there, you guys. And the way that you deliver the information makes a big difference. And so I wanted to make sure that when I could deliver the information, and it was a huge learning curve. I got a lot of questions that I didn't think people had questions to or about. And so it allowed me to take notes on all of these things and actually see what are people really struggling with, and how can I actually put this into a system that's scalable, that can be put out there for everybody to take advantage of, and that just trumps the market when it comes to Elliott Wave, and just smashes the competition. And so, going through and taking these guys through all of the results that I did, I knew that I could do it to for other people. It is teachable, it is duplicatable. You can learn it, other people can learn it. Okay, it just needs to be put into a good systematic approach. And so, these were some of the results that these people got. And I can't guarantee this to you guys by any means, but I know that they definitely didn't expect this out of themselves. So, with that being said, you guys, I want to swing on over here to the masterclass that we've put together on Ready Set Crypto's platform with Mav and Doc. And these guys came and they reached out to me and they saw just how passionate I was about Elliott Wave and what I was doing, and my unique viewpoint to this trading style. And so I put a lot of work into creating this masterclass for you guys that really focuses on giving you not only the basic information but the tools and the application in order to actually execute on it. That was, remember, we look back, that was the number one thing that was just driving me crazy when it came to taking a bunch of courses, was that I felt that nothing was actually giving me something to take away and actually apply it. That it was just definition based information. And so I really went above and beyond to put together this masterclass to where it features an ultra learning methodology. And what I mean by that is that it features a structure to where you actually retain the information a lot better. Okay, most people study wrong. They take notes when they're watching videos. That's the wrong way to do it. Your brain doesn't actually pick up the information or retain it how it's supposed to when you're trying to actually write it down. And so, if you're quizzed on it and you have to actually pull it from memory instead, you actually retain the knowledge a lot faster. And so, I've structured this masterclass in a way where it does accelerate the learning curve to it so that you pick up on this quicker. It's got visuals, cheat sheets, very comprehensive PDFs as well to put into it, you guys. And I mean, it's absolutely amazing. So with that being the case, I want to throw in there too that if any of you guys get signed up today, I'm going to be doing a special group coaching session for those that sign up today into the future here. So take advantage of that. You guys will get some one-on-one time, some group coaching time with me where I can answer, questions and so forth, help you really kick through those aha moments that people need in order to really get this stuff applied. Okay, so I want to bring Doc in and let Doc kind of finish up. I know he's kind of got the format there for you too. Let you guys know what the pricing is, all that good jazz, and then we'll go ahead and we'll take some questions and answers. All right, Doc, you're up.
Okay, there we go. Hey, everybody. Thanks for hanging out with Shiler's presentation. Good job. I learned a couple of things about Elliott Wave I did not know before, so that's awesome. So today, what we wanted to do was offer you guys. We've worked with Shiler over the last couple of weeks really hard on this, and we've gotten a master class that we have set up here. So hopefully this is broadcasting out there under readysetcrypto.com/wave. We have a launch sale going on right now. So without further ado, I'll go right to the bottom line. Shiler's Masterclass is going to be $99 one time. So it's we've got a bunch of modules of information on there. Each one of them has got a PDF. It's got an online quiz as well too. So video, PDF, quiz. So each concept, so regardless of what type of learner that you are, whether or not you're more of an experiential or visual or more of a reader, you'll have an answer to something like that, right? So each one of these, you'll have direct access. We're going to have our own Elliott Wave Discord insider group. We're going to open up a channel in there just specifically for Elliott Wave. So you're not going to be on your own doing this. And of course, you'll have access to Shiler as well too with this. Okay, so you can sign up for the class, but one way to do this also is to join us as an Omnia member for $66 a month is what it comes down to for this. So if you sign up for 3 months, you get in for everything that we do for $66 a month. Let me show you guys what this actually looks like. So if you get into the members area, you get into the premium class archive of Ready Set Crypto. These are the classes that we have here. So we've been doing this now for over 2 years, and we've just got a ton of information for you guys. So regardless of whether you're more fundamental hodler or whether you're a short-term trader, long-term trader, want to learn how to get income with options, trade futures accounts, and understand the psychology behind trading, it's all there for you. So you can see the Elliott Wave Trading Masterclass here. Let's just go into the class itself and show you what it looks like. So for each one of these concepts, each one of these modules, again, you can download the PDF file and bring that up and start to read about what's going on. Here's the one on how Schuyler uses the relative strength index, or the RSI. Right? So there's also the video module, and of course you can expand that and make it full screen, or you can actually take a quiz and test your knowledge on whether you're getting the concepts or not. And of course, working with the community that's on there. Again, this is where you can learn something like this. And for $99 one time, or you can join us as an Omnia member for $199 through this link here at readysetcrypto.com/wave. And that is the most cost-effective way to get on board and get access to all of our materials as well too. So it's your choice. And with that, we're going to throw it back here and we'll see if you guys have any questions. So we'll hang around here for a couple of minutes and answer any questions that you guys have.
Yeah, hit us with the questions, guys.
There was an earlier question on why you used a 4-hour chart. Was that something that you normally use, or is that just to show the signals for today?
Yeah, so I actually trade on a 15-minute and a 4-hour. So I actually have like a time frame sequence that I go through. So it starts with a weekly, daily, 4-hour, and then down to the 15-minute. And that's because I've developed a relationship with the fractal between the 15-minute and the 4-hour. So that's a big thing to take away, is that you don't want to go in between a whole lot of different time frames. Get familiar with the same ones. So I know that's a long answer to whether or not why I use the 4-hour, but it's very powerful.
Oh, Space Lord did show up today. I gotta say, I love that. I love that name. That's great. Okay,
Very
all right.
nice.
Patrick is asking, can you explain the stop loss again?
Yeah, I'll go through the stop loss real quick for you. Let me share my screen.
Yeah,
Give
go
you,
ahead and grab the
I can
screen.
kind of break this down here real quick. Okay, so I'm going to give you like just a visual of it first, and then we'll go apply it to the charts here. So using a fib retracement tool, okay, you're always going to pull from left to right. Doesn't matter if you're going from top to bottom or bottom to top. Okay, always left to right when you pull this. Okay, and you're going to set it up when you go into settings here. You're going to go into settings. You're going to set it up with a 1.236 and a 1.382 and a 1.618. Okay, and then you also want a negative side to it as well. Negative 0.236, negative 0.382, negative 0.618. The reason for the negative is so that you don't have to flip your tool around and use it backwards. Okay. It just, no matter which way you pull it, left, left to right, it's going to be up on the top so you can measure either way. So it keeps it simple. That's really the only purpose to putting the negative on there. Okay. So you don't have to flip your tool around. So when you have those two set up, your stop losses, most people, if you're pulling from a high and a low, okay, this is your high, this is your low. If most people, if they're looking to, let's say they're looking to short right here, they're, so price is going to move down. So they put their stop loss right here. I'll change the stop loss color to purple. So they put their stop loss right there above the previous high. And what I'm saying is that for a stop loss, it should actually go above the 0.236 and the 0.382 pocket, or vice versa on the other side, the 1.236 to 1.382 pocket. So your stop loss should be on the outside of that. Ideally, if your risk to reward management can handle it, it should be outside of the 1.618. So, but it, for most part, anything going past the 1.382 will invalidate that move. So in other words, what happens with price, and this is from an Elliott wave concept that it's too much to try and explain right here, but the reality of it is that price moves down, breaks this previous low, comes into this pocket, and this acts as a pivot, acts as a pivot spot. So instead of putting a stop loss here, you're putting your stop loss here, and you're actually putting in your entries right here, then your stop loss is amazingly tight. So in other words, and if you do it this way, you can actually get away with putting your stop loss down here. If you're taking an entry rate, let me change up the color on this one here. If you're taking an entry, let's do yellow, in here, and you're looking for this sort of a trade, that's a no-no for me. That's bad. Okay. Um, this is too soon to be getting into a trade if this is where you're setting up your stop loss at. So, and I go through explaining that in course as to why. So, there's a little bit more that goes into. You have to actually understand the wave structure a bit here, for why that is. So, but for the most part, just going from low to high here, if you're always putting your stop loss instead of underneath the previous low, but actually down underneath the 1.382, it will protect you more often than getting stopped out and then price moving on without you. Okay. So that's let's go apply this to the charts a couple times here and take a look at where this kind of gets incorporated at. So this move right here. So see how we get a move down. This one comes back up and then we're coming back down. So let's say that you took a trade somewhere in here. Instead of putting a stop loss underneath the previous low, you want to pull from the previous high to the previous low, okay? And then you want to put it outside of the 0.382. Okay, that 1.382 or the negative. So right here would be your stop loss. Ideally, the way that I like to trade it is to put entries here and then a stop loss underneath this one here. Okay. But if you took your trade up here already, then it'd be better to just put your stop loss under here rather than here because you can see how fast price moves up off of these pivot points. Okay. Let's check out another one. Um, and take a look at that one here. So this one actually only came to 105%. So 105%, that's valid. But notice that if you put your stop loss under there, boom, you would have been wicked out on that wick. That one stupid little wick right there. That's so frustrating as a trader when you get wicked out there and then price moves on. But if you had your stop loss underneath here, 0.382, yeah, it's a little ways away, but better be safe and manage your risk and take a smaller position, put your stop loss out here than it is to take a bigger position and tighten up your stop loss too tight to where these wicks are getting you. Okay. Um, let's take a look. And the reality was with this one right here, actually, the count was actually from this wick right here, and you can see how well the 1.236 actually worked on that one. So if you were pulling just from previous low to high and you didn't have experience with Elliott wave, then cool, it still would have saved you. But on this move here, you actually would have gotten entries in on that and profited off of that run. So let's go back to look at another one. Heck, even this little guy right here, we bounce up low to high. And again, 1.236, 1.382. It's almost freaky how well it works out, guys. But this one over here, again, pulling from previous low, previous high, not even understanding wave structure or anything. Again, 0.236, 0.382, stop loss here. Okay. Here's this guy right here, 105% would have wicked you out though if you put your stop right there. Okay. This one would have just scared you really hardcore. Maybe on a different exchange like Wick Kraken, it would have gotten you. This move here came down to a almost to the 1.236 as well too. And this works in the opposite direction. Okay. Again, broke previous low, moved on without you. Okay. So, and this works in the opposite direction. So you can reverse it. You can change it upwards. So take a look at like this little move here to here, previous low to high there. Again, 236, 382. There's that wick right there. Okay. So does that make sense? Does that answer your question? Sculpture Smith, good to see you in here, man. Space Lord, Andy Rams. Awesome. What other questions we got, you guys? I'm curious, how many of you actually have trading strategies? Something that you religiously follow? What do you mean? Oh, yeah. There you go. I can see, let's see, Lexus said, why do I have RSI indicator on the chart? So RSI is something that gets paired up with Elliott wave extremely, extremely well. They're best friends. Yeah, I'll definitely be able to help answer questions or guide you along. Let's see. Let me know if there's any other questions, guys. Otherwise, we'll kind of wrap this up here. I was kind of scrolling through just to see if there were any other questions too, but good. It means I explained myself well. I could hear you there. Yeah, we're gonna go ahead and close up everything. It sounds like Dot got muted there. But you guys, I hope to see you in the side of the course and help you guys through your journey with trading. And I wish you guys the best of luck. Lexus, I trade other pairs as well. All right, go ahead and end it, Doc. Thank you so much for having me on. I really appreciate it.